another question comes in this relationship, main contractor and subcontractor. If the builder is adopting a composition method of 5%, say for example, a developer is adopting 5% composition method, then whether that contractor to whom you have awarded contract go some other methods for computing the liability and claiming the set of benefit. Answer is no. In the reductions method, you will find in Rule 53 that your principal contractor who is adopting one composition method, you have to go by that. You have no other choice while computing that liability qua that setup is concerned. So you have to keep in mind this aspect while calculating the liability. Now the question comes, if the stamp duty is paid and recovered, if the stamp duty is paid and recovered by the builder and developer, whether that will form part of this contract price while interpreting the term contract in composition method, the value of the contract. Stamp duty is paid, electricity deposits are paid, all these aspects are involved. So in such circumstances, whether it can be reduced or not? Yes, answer is no. Our senior brother Patkar Sahab has already argued that matter in the context of the motor vehicle, that any registration fees paid, insurance paid on behalf of the buyer, that is required to be reduced, it cannot be form part of our sales price. Keeping in this mind, all the other additional expenses which incurred cannot be form part of the contract price. Even you are writing in one particular head in your books of accounts, that is required to be reduced. Then another question comes to me that in a big projects, big housing complexes, there are various aspects are involved like gardens, swimming pools, clubhouses, etc. All these things are. Question comes, while computing the liability under Rule 58, 1A, whether the land cost in respect of that swimming pool, clubhouse and other areas where the builder is having a dominant role until the conveyance is unless it is transferred by way of conveyance, then the question arises whether the land area in respect of that swimming pool area, garden area and clubhouse area is subject matter of reduction or not. Answer is certainly yes. No need to prescribe because it is not at all transferred. So therefore, no, if you takes into account the total value, then it is required to be reduced. But it is when it is not at all transferred at all by way of conveyance to the other persons. The control is with the developer and builder. You have to give a thought on this. See, if 7 buildings are there, a clubhouse and a swimming pool is there, facility is given to amusement or for entertainment, but the dominant control remains with the developer and builders. What about that? Whether are you going to reduce that amount? Because that is not conveyed, that is not, no agreement is entered in respect of that. Whether you are entitled to reduce from the total cost? That is my question. Answer is that no conveyance is made. Therefore, it cannot be neither part of the total contract value, that value, nor it is required to be reduced. Wherever the agreement is entered, that value is subject matter of levy. Now question is whether service tax component, when you are in the composition method, whether this service tax component will form part of your sales price. Frequently questions are coming. So whether service tax component will form part of, there are different judgments are there. My senior brother Patkar Sahab is also arguing, myself is also arguing. There are several matters are there pending before Honorable Tribunal. So far as the composition method is concerned, Nikhil Comfort judgment is there already. They says that Tribunal's judgment, the service tax quantum will form part of this contract value for the purpose of levy, which is subject matter of challenge already. Then in Sujata Printer also, and while interpreting the Rule 58 also, they said that no, yes, service tax quantum is also forms part of. So these are the subject matter of levy, but if you strictly ask us, both of us, we are of the opinion that no, it cannot be form part of this sales price, because as I pointed out to you in earlier occasion that in the charging provisions while created under section 6, the total turnover of sale is subject matter of tax in the levy of goods. Turnover of sale means sale price. In the sale price you will find that though excise, customs and all these things are included, but the service tax part is no role so far as this definition is concerned. If you look in this angle also, then it cannot be form part of, but it is subject matter of adjudications. Let us see what the findings are coming. We are fighting for this cause. Another questions, very important questions came just yesterday, that a undergoing construction flat is there, agreement is entered but not registered. In some cases it may be registered, such sort of questions will come, but subsequently while undergoing the construction, before the occupancy certificate is given, cancelled, and he has made an application for refund of stamp duty, whatever the pay, and the builder retained that flat. After cancellation, and he is under composition scheme, paid 1% when in the month of registration. Builder retained that flat, and after the getting occupancy certificate, then that flat was sold. Then how it is to be quantified now? Are you going to get the benefit of that? Answer is certainly yes. Goods are involved in the execution of works contract is to be interpreted as if, as L&T, in the L&T's judgment, Supreme Court said that ordinary sale, that transferring of goods from one person to another, when involvement of goods is there also, you have to think in that manner. If you say that you have to think in that manner, then the goods are involved, and on account of certain contingency that registration is cancelled, then it will be reversed back as if it is the goods is not involved or transferred to others' property. Then why we should not claim the benefit of that? We can take the benefit in the month in which the cancellations is made. And what about the liability when the immovable property is sold? Because after occupancy certificate, the flat is sold. Then there, in the hands of the builder, no liability will be there, as Honorable Supreme Court in the KL Rahejas matter very expressly, clearly explained. They said that if the flat, see the language used is, if the construction of a flat is completed, then you are entering into an agreement, then it is the out of the purview of the Karnataka Act. They have expressly made in KL Rahejas judgment in the second last paragraph, if the flat is constructed ready to use, then in such circumstances no tax will be leviable. That was approved by, in the judgment, L&T's larger bench decision. This aspect is because immovable property cannot be brought into subject matter of tax net, even though prior to that bringing that immovable property, prior to buying of that immovable property, involvement of goods is there. Involvement of goods is not the criteria. Along with involvement of goods, there must be an incident to create. Thereafter, that measurement provision, applying all these three aspects, charging, incident and measurement provisions, then only you can compute the liability. If any one of them is silent, then we cannot bring into the tax net. Therefore, in immovable property, as categorically in these two judgments already they have said immovable property cannot be brought subject matter of tax net. Now the question comes, this 1B. 1B I have already clarified to you, and you have also said that we have gone through that. Percentages are applied. That up to plinth, up to this particular part is completed, up to that particular part is completed, then the occupancy certificate is received, then it is just very wide area open to challenge this particular 1B, as I pointed out to you in earlier occasion. Now the question comes, since it is in the statute book, already now with retrospective effect. We have to compute. Now the questions comes. This says that wherever the municipality law is there, means local law is there, in respect of governing the completion of the construction of a flat, then in such circumstances, if any certificate is received from that authority, that is occupancy certificate, they have mentioned, then in such circumstances, you have to compute the liability accordingly. If the agreement is entered after the occupancy certificate is received, then in such circumstances, no liability will be there on that particular contract, that particular agreement. But the question comes, wherever the authorities are not there, in such circumstances, how the tax is to be arrived at. Or if the occupancy certificate is not given, then how it is to be worked out. They have said that no, one particular licensed supervisor, which is already they have prescribed, that licensed supervisor's certificate is valid certificate. But in the absence of that particular mechanism in the local law. But my question, crucial question here is, Bombay Municipality Corporation Act is there already. Mechanism for certification of this completion of the project is there already. But when the building is constructed, when the flat is constructed, ready to use, or partly completed, then you make an application as per the provision, development rule, that you come and supervise, it is that the flat is ready to use, construction is completed. Your licensed supervisor has issued a notice that you please come and see that yes, it is ready, but they are not turning down. Then in such circumstances, whether the deeming provisions under that local law is applicable or not. So deeming provision prescribed, if you talk about the Bombay Municipality Act, 353A is there. This is that after issuing the notice, if the licensed supervisor, if the persons, authorities from the municipality doesn't turn to you to certify about the construction completion, then in such circumstance you have to wait for 21 days. Thereafter it will be deemed to be treated as a construction is completed. You can take the benefit of that and you can argue in this manner also. Wherever the within 21 days that municipality authorities they have not turned down, then that is a deeming certification. So they says that you have to obtain an occupancy certificate. So this is a deeming occupancy certificate prescribed under 353 under the local law. So wherever, because it is very difficult to get an occupancy certificate from the authority, municipality authority. So for so many years it's pending. So therefore why this deeming certification provision prescribed under 353, we can take the advantages of that, and after the expiry of the 21 days, we can very well argue that yes, constructed flat I have sold after expiry of these deeming provisions, but you have to bring on record all these evidences so that we can escape the liability of that immovable property. Now, next question. So far as Patkar Sahab will guide on this aspect, because he was argued this matter before Honorable Supreme Court, that whoever filed the returns, I will touch the quantification part, whoever filed the returns, they are open to file revised return as in view of the Supreme Court's decision. Now what about filed return, paid the liability, filed audit report also, say for example. Now on account of change in these notifications, some additional liability is created. Because earlier, as I pointed out, land cost we are determining, land as well as the interest over the land, all this taking into total consideration we are minusing. Now they have brought some cyclostyle formula under 1B. They says that you have to go by this and you have to compute the land liability also, land cost also in this manner and reduce this aspect, then liability. Suppose an additional liability comes, then what is the fate of that additional liability? As I pointed out that virus can be challenged, number one. Now so far this additional liability, you accept these notifications, then you have to pay that additional liability. But so far as the penalty part is concerned, you can very well challenge these aspects on account of all these contingencies. I think in the other question answer session we will take into account other aspects. Now I think in most of the, I cannot say that I have completed all the things which is required to be analyzed. In the question answer session, Patkar Sahab and myself will try to answer your queries. I think I have completed. So thank you for your patience here.
Thank you, Mr. Shamal. And now we have to hear Mr. Patkar on the special comments on SLP filed by the BAI, that Builders Association of India, and MCHI, wherein Mr. Patkar will give his special comment. Before he comes, let me introduce Mr. Patkar. Okay, sir, just a minute. As a mark, sir, at least felicitation. Pankaj bhai, please felicitate Mr. Patkar. Thank you. Photo, sir. Over to Mr. Patkar.
Just now, my learned brother Ratan has explained to you how to file the returns, compute the liability. But after seeing this notification, I don't think that immediately we'll have to do. But this notification is also going to be challenging. We are in the process of examining this new notification. There are so many things which can be challenged, and maybe some points are involved in which we may get stay also on this. Some points. I'll come to those. Now basically, before I go to that notification, let me just explain to you what was the challenge earlier, what was this SLP. See, there were two Bombay High Court judgments. One judgment related to the powers of the state, competence of the state to levy tax on the goods involved in the sale of flat, that is executory agreement, what we call. That judgment Bombay Court decided against. We went to Supreme Court. Supreme Court larger bench said yes, state is competent enough to levy tax. Then there was second judgment of the Bombay High Court, where the issue was, according to the rules which exist on the statute book, then rules, it is impossible to calculate the tax legally payable, and therefore two prayers. One is permit us to pay the tax by adding gross profit margin to the cost of the goods. That was one. And second was, since the rules are not workable and since there is no justification for the government to issue the notification of 1% in the same set of circumstances applicable to same people and for the same projects effective from 110, so kindly make it retrospective from 26. Supreme Court, this Bombay High Court turned it down. Then the SLP was filed, and that judgment in that second SLP was delivered on this 31st January, that is latest. However, that SLP, that Bombay High Court judgment was to be considered in detail, but however by then the government came out with another notification which was dated 29 January. Now, whether that Bombay High Court judgment, which was on the second issue, whether it is nullified or not, that is the first decision. According to me, the propositions, other than that 1%, but even 1% notification was compared to the rules, existing rules 58(1)(a) and Rule 58. That 1% notification was compared to those rules, and therefore we were saying that there is a discrimination. So even in that case, Supreme Court judgment which has come, that issue is affected, I am saying, may not be totally nullified. See, it's not that in that judgment of the Bombay High Court said that altogether they are not competent. They gave some judgments were there where such retrospective effect was given by the court. Then they said no, these judgments, there the mechanism had totally failed. Here the mechanism is not totally failing, that is because of Rule 58. Therefore so now that point may be again taken up in the new petition on the basis of this new notification. Maybe. As I've said, we are thoroughly analyzing because we don't want to, we want to be more cautious this time, and we don't want anything to go against us. So that is one part. Second part, now that what we were saying about cost plus, I'll tell you now. Looking to this new notification, you don't have to call for cost plus. Department itself will come. अरे भाई ये सब हमसे नहीं होता है. आप मटेरियल कितना है बोलो, इसमें वो लिखा है 50% लगा देता हूँ उसको. This is going to happen. So you don't have to yourself ask for that. I'll tell you why. Well, see, that time it was a necessity. That time only 58(1)(a), and that too it was which was defective. Now there is no necessity. I'll come to it little later. Let me first read out to you. We have kept a copy here, but it's a small this one. Let me first read out to you what the Supreme Court judgment is, the latest judgment. We are satisfied that the controversy in the present special leave petition is concluded by the decision of this court in Larsen and Toubro. Present special leave petition means which was filed against that Bombay Court judgment which related to that cost plus and 1% notification. So they are saying it is concluded. Concluded means what? Whatever they have said in their judgment. They have not said whether this 1% is proper or not. What they are saying that it is concerned with, now you go according, further they have said, now you go as per our judgment. We accordingly dispose of the special leave petitions in terms of that decision. Kindly note these words. They are disposed of, they are not dismissed. If the issues are not considered, the court always says SLP or appeal is dismissed. They are disposed of. We accordingly dispose of the special leave petitions in terms of that decision. It is, however, clarified that if the petitioners have any grievance about the notification dated 29/1/2014, they may pursue their remedy in that regard. We further clarify that if the petitioners file revised returns in terms of, now these are again crucial, as I have told you, the order is here and Pankaj has also promised me that he would upload it on the website. You will also find it in sales tax review, because this order, this judgment of the Supreme Court is very important. What they are saying, we further clarify that if the petitioners file revised returns in terms of this order means this order dated 31st January 2014 and or notification dated 29/1/2014. So what you have to consider this particular order where they are saying that you follow our judgment, larger than judgment in L&T. Then you consider this notification also dated 29/1/2014. Such returns will be examined by the concerned assessing officers appropriately in accordance with law. This is the judgment which the Supreme Court has given, which has far-reaching effects. Far-reaching effects. Now you forget all earlier judgments which has been given by the Bombay High Court, except Supreme Court's larger bench judgment and this particular judgment. Now, when they talk about 20 notification they dated 29/1/2014, naturally you must be thinking why they have kept it open, why they did not themselves in this petition consider the effects or wires of this particular notification. They could not have done so. The main reason is they could have done, but unfortunately now see in Delhi similar law has been introduced and L&T has their petition was already there. They are now they are amended about mechanism of the, see, it's a clear law. There is not one, there are number of them. Even Deepak had given me one judgment which was in it. If mechanism fails, the levy also fails. There are a number of judgments. So now L&T has had that petition been amended and heard by the Supreme Court and admitted prior to this, they would have considered this notification. But then it was too late. It was this notification. The government gave us this notification in our hand in the court itself, though we got it earlier day. Then it was not possible on Supreme Court. And then we also thought, better to have one more chance. Supreme Court directly dealing with this, let High Court deal with this first. See, there are so many lacunas in this. Some of the lacunas which we have just now, till today, which we have considered, and we are of the firm opinion that on these lacunas, so Bombay High Court will definitely admit the writ. I am not talking about stay. Stay is altogether a different thing. One is regarding the occupation certificate which they are saying. See, occupation said no, this completion of a flat, from where it came? It came from K. Raja's judgment. K. Raja, in the last paragraph they said, if the flat is completed, then there can't be no levy. Same has been upheld by the Supreme Court in its larger bench judgment. However, they are talking about completion of the flat. They are not talking about the occupation certificate. This occupation thing this is a mischief played by our government and commissioner in his earlier circular. This is their mischief. Occupation number, see, occupation, I'll tell you, fortunately or unfortunately, why I'll tell you later on. I have one client who constructed a building. People bought the flats, people went there, people stayed there, people are paying. In 2008 it was completed. They are paying the electricity bill, they have gas connection. Over and above that, those some of them, they took loans from the bank. Bank officials went there, they made out a report that this is a completed flat and and loan can be granted to them on the bank got it mortgage with them. Bank got it mortgage with them. Everything was done. However, there was a dispute with the architect. So architect did not apply for the occupation. He applied in the year 2012. And in 2012 that occupation came. Now, in such circumstances, whether the flat was completed or not. So now unfortunately that is because when we ask some individual builder, now that particular client I am saying you file it now. This is the proper time, otherwise you will have to pay more. He says, no sir, you catch hold of somebody else, I finance, but don't take me to the court. But they all worry, you know why we go to the associations. Actually going to the association, it's somehow then arguing the matters, it is very difficult because you have to go general. But it is always better to have the writ petitions in individual. But these individuals, they are afraid of the future actions. Suppose we lose the case, then mere piche gir jayenge. So let's see. But now see, the question is, now this will be challenged in the court. This is the first issue which is involved in this. Occupation, there is nothing like occupation. There are number of the premises in Mumbai itself where there is no occupation certificate. I am staying in a flat which is at the ground floor, and that building last 15 years I am staying there. Last 15 years, see, it was a stilt earlier, and the fifth floor was also not constructed, and builder got the occupation certificate from first floor to fourth floor. Ground floor there is no the occupation. Fifth floor, last 15 years I am staying there. I am sure that since it is a ground floor flat, it will not be demolished. like Campagola. But then the fact remains that is a completed flat, and this is a backdoor. This is a backdoor attempt to levy tax on the immovable property. That will be the proposition. This is one. Secondly, what they have done, from 2006 to 2000, they have introduced this amendment with effect from 2006. Ask any builder whether he had any time applied to the that town planning authority or maybe the municipal corporation for stage-wise completion. Or I'll put it other way. Go to any authority and see whether any record is, or no one applies. They go only for commencement of certificate and for then completion of certificate. Then in such cases, see, this is impossible to perform. Impossibility of performance will be the ground for challenging this notification. If they don't have the record, then who will give you the certificate? Currently we will see. Currently also we will see, as Ratan was explaining, you write to them 21 days, that is different matter. That current problem will come, see, like works contract you must have seen. First year it was 1%, then it 2%, then 3%, then 4%. That time you will have to challenge that. As on today, current problem is not there. As on today, the problem which exists about the previous this one. You are asking us from 2006 to 2010, you are asking us to get the evidence which is impossible to get. So that is another point. Third point is, you have made a slab. You say, see, I'm sorry to say, the people, when I am going to write in sales tax review, I am going to say in clear words that in commissioner office, the people are sitting there with perverse mind. They don't know ground realities. Absolutely don't know ground reality. In Bombay, you have most of the developments are SRA developments. Now, in SRA development, you enter into the agreement with the tenants before the commencement. And now, so far, see, there are three options given to them. One is, if the tenant is occupying some 200 square feet area, he is given that much area, newly constructed area free. Thereafter, some 30, now it is 33%, 40% builders are given. Previously it was just 10-15%. Some 30-40% extra area is given, that is also free. Over and above that, they sell some area to them. Of course, there is a cap. Otherwise, all of them will buy the entire thing. Some area, 100 square foot, 150 square foot. Over and above that, they give. Now, that is a saleable. Whatever goods are involved in that, that you are allowed. Now, they are saying it is 100%. So, in that particular 150% which is saleable area, whatever goods 100% is taxable. So that is another. And thereafter RCC structure and what you know about RCC structure. A bare structure you are talking about. So anyway, these are some of the points we are analyzing further. Maybe now Supreme Court has said you can file revised return. How can you file revised return when you don't have the proper rules in your hand? On what basis? Unless and until these things are clear, you can't file revised returns. Then what will happen? According to me, we don't know. Somebody from the department must be listening all these things. Or you take information from it. We don't know. Maybe Commissioner of Sales Tax will now come out with a circular saying that as per Supreme Court judgment, you will have to file returns before 28th of February. They give the shortest period to do it because they know they don't want you to give more time to file writ petitions. The short date was before 28th February you file. If you are able to file prior to this, nothing like that. But then what happens, any haste may sometimes make you fail. Therefore, we want to file even if it's circular come. Now, what my advice to you is, if any such circular when it comes, just write a letter to either go for DDQ to him and tell him that kindly work out our liability. File DDQ. But then see, it becomes very difficult if you have the people who are having township, how many DDQs you will file? Each agreement you will have to file with them, or you have to say that all other agreements are identical. Or at least write a letter to them that we are not able to work out our liability as per your new rules. Kindly call us and work it out. That letter will come to you because see, now they have no time. Till 31st March they will have to assess you. I don't know whether they are extending the period, but I don't think he will extend the period, at least now. That is because it is in his interest. They will just do the assessments, create exorbitant liability and throw it off. You go in appeal and see. But it's worth going in appeal in all these cases. It's not going to survive, take it from you. Whatever you are paid, that is enough. Finally they will come to that. Today they are not listening. That time only we had told them that see, it is very difficult. As per the original 58(1)(a) and Rule 58, it is very difficult to compute the liability. So why don't you allow us? Your Supreme Court itself is saying in Gannon and Darkarle 88 STC, Supreme Court has made categorical observations saying that there is no distinction between a normal dealer and the contractor. Both are liable to pay the same amount of tax. Only because here the working has to be done in a different matter, they have given the deductions there because there is agreement. There you have the sale price. So far as normal dealer is concerned, the sale price is prefixed, it is the determined sale price. Here you have to determine the sale price and pay the tax. That is all. Therefore they have given the distinction. But at the same time, they have made it very clear that there is no distinction. So therefore I am going a step further and saying it means the tax can only be on the MRP. Nothing further, where is a contractor or whether is a normal, a person who sells a cement bag in his shop, what is his MRP and the contractor's this one, it is the same thing. It can't be more than that. Anyway, you have still it can be argued. Don't be under impression that this cost plus and everything else. Only thing now you don't have to say cost plus. Why I'll give you the example for this. Now I'll just read. You read my October article in review in October 2013, where I have given, purposely I have given so that you don't have to read that entire judgment. Some paragraphs if you read, you will realize what Supreme Court has exactly said in this. Now the paragraph number 101, Roman 12, taxing the sale of goods element in a works contract under Article 366, 29 AB, read with the entry 54 list 2 is permissible. Now be careful, be with me. Is permissible even after incorporation of goods, provided tax is directed to the value of goods and does not purport to tax the transfer of immovable property. Does not purport to tax the transfer of immovable property. There your occupation certificate comes into the, because then it purports to tax the transfer of immovable property. Further, the value of the goods which can constitute the measure for the levy of the tax has to be the value of the goods at the time of incorporation of the goods in the works. Now very important observation. Even though property passes as between the developer and the flat purchaser after incorporation of goods. Kindly mark this. These particular observations have been made in the context of the argument, because then that transfer is always in the flat, in the conveyance. These observations that material can be incorporated, now pay a balance. But transfer by can be any time. When you transfer the flat, that time, and therefore they are saying third party. Actually, that is not the concept of works contract. That concept has been created only for the purpose of this levy of goods involved in the sale of flat. So transfer can be any time. Entire Supreme Court judgment, if you see, they have at so many places they have said that works contract is one of the elements of that entire agreement. One of the elements. The argument was there are three elements. One is works contract, another is services, and third is sale of immovable properties and sale of land. They have not said in so many words that there are three elements, but they have accepted the fact that entire agreement is not works contract. Works contract is one of the elements. Now, very important thing is, you see rule, if you are going by rule 58, I come to composition also. If you see rule 58 properly, therefore I am saying now, you don't have to go for cost plus. They will come forward and say, no. Now we will have to estimate. We will go by cost plus. Rule 58, clause G, it talks about deduction of what? Other similar expenses relatable to the said supply of labor and services, where the labor and services are subsequent to the said transfer of property. Now everything is covered under Rule 58 due to Supreme Court judgment. And Supreme Court itself is saying, you pay the tax according to our district. Though Rule 58 simpliciter, it is only for works contract. Because the initial paragraph they are saying the amounts relating to the deductions pertain to the said works contract. But now when this Rule 58 is read along with the Supreme Court judgment, you are entitled to all the deductions under Rule 58 if they do not give under 58(1)(a). Which are those deductions? Premium payable to government for availing additional FSI, payment to be made to BMC in respect of development charges, scrutiny fees, IOD deposit and premium to be paid for deficiencies in open spaces, land revenue NA charges, solicitors fees, RCC consultancy fees, municipal assessment charges for land under construction, storm water drainage charges, debris removal charges, sewerage benefit charges, amount paid to existing tenants, stamp duty, registration charges, rent for providing alternate temporary accommodation, shifting charges, borrowing cost. When you read Rule 58 along with this judgment, then all they see, initially we were arguing that all these costs, they have to be, you should provide it in 58(1)(a). 58(1)(a) you are talking about only bare land. What about this? But now if you read them together, you will get this. You will get this. This is what, and of course we are also examining whether, again when they are giving deduction for the bare land, whether that deduction is proper, because that gets multiplied by FSI and TDR. But we have not come to a certain conclusion. Therefore, I am not saying anything about this. Now, this is one thing, my friends. Secondly, again the benefit of this judgment. Supreme Court has in every paragraph they have said that you can levy tax only on the goods involved in the execution of works contract, and works contract is one of the elements. It is only because of this the government people that matter it has gone to High Court to Supreme Court, again came back from the Supreme Court, new foolishness and new petition. This is what is happening. So they may not get, they may say. Secondly, what happens, when you go to the court, they say, see, let them assess you and then you come to us. Because then they also get the clarity. Immediately going after a rule is, now this about occupation certificate and it's okay. But what they say about this, the slab which they have given, or when we say these costs are not available, then they may say, no, you let us see the government stand first. Let them assess you and then come. That may happen. So they may not issue the stay. If they don't issue the stay, pay your tax in your revised returns on the basis of this